Hi, everyone. Today is December the 18th, and this is the Moneyball Morning Report for the Benzinga Pro platform. We can see here on the calendar of economics that we have got a full day of information coming out, just tons of economic data releases all over the place. And so the big thing, of course, is the Fed release, and that is going to be important. It is an FOMC day. Let's get to the charts. Charts by TrendSpider, of course. We do also, I have to give a hat tip to Edgeful, who does those very neat market stats that you can find on the TradingView platform and inside of their private Discord, or they also have a public Discord, but it's better to be a member. You can get a lot of data there. And also my favorites at Mentor Q Pro, who will be putting up all the gamma information for TrendSpider that you'll be able to add to your charts, which I think will be absolutely fascinating and very, very useful. Okay, so here we go, starting with the ES, the current contract. What we are looking at is this same sideways formation. Now, I do want to say that Not Your Advisor, who has a Substack reading, is very good at data stats, and he says that when Powell is on stage, the market never sells off. And never is kind of a really bold word to use, and so it's after he gets off the podium that things sort of settle out. Okay, so and that begins at 2:30. Of course, many of you know that I'll be out of pocket by then, and so I'll be catching up with the news as it is, and we'll give everyone a recap once my jet lag settles in. Okay, so what have we got? Sideways formations, bottomings in the value area low, and then in the overnight, inventory is largely bullish, right? Long inventory here. Should we have an inventory correction? Yes, we should. But will we? Hard to say. Very, very hard to say. Price action. Remember I said yesterday or day before yesterday, listen, as the prices moved up, even when we went into the open, the inventory correction was very short and it continued to the upside. I said, hey, maybe it'll be the same way in the broad market the following day, i.e. yesterday, and inventory was short coming into the open. It continued short. We had one inventory correction, and then the market sold off into the afternoon until about 2 o'clock, where it started to hold, and that was largely, I suspect, because it was at the bottom of the value area low. Today, what do we expect? Well, inventory is long, so we should have an inventory correction, but what we have been doing is just moving from the bottom of the range to the top of the range. So my suspicion would be exactly the same. If we ride into the open and we are upside, we should expect minor inventory correction and then a move back up to the highs at 61.60. And then, we'll see what happens Thursday. That being said, where will we be wrong and where are the best places to enter? Well, my suspicion is that the VWAP area near 61.35 is going to be the ideal buy opportunity, because we'll have all of these moving averages right here. 61.35 would be great. The point of control, however, is all the way down at 61.27. Notice we've got momentum that's very high. When momentum is high and the market begins to roll over, once we get underneath this moving average, it will continue down. So as long as we stay above this average, the pullbacks are going to be buy zones, upper edges 61.60, lower edges 61.14. Let's take a look at the NQ. Wow, very tight. Very, very tight. Wow, that is very interesting. All right, gigantic breakaway a couple of days ago, shallow retrace. So let's measure this breakaway wave. We're going to use a Fibonacci right here. Almost pulled back, old resistance, new support. It's really quite fascinating, right? So my thought is that this is the box we are looking at, but the clear formations have to have an area that's resistance, breaks out, pulls back, that area becomes support, and then that creates the range action event. It also tells us where supply is sitting and where traders are ready to get themselves involved in the market. Okay, so what are we looking at? Same sort of range formation, straight up, pulled almost half back, and then in the overnight, we've had bullish inventory, right? And so what do we expect? Bullish inventory up into 22,425. What is the upside here? Let's see if we can reverse this. Yep. And that gives us 22,700 with the halfway point at 22,570-ish. Okay, pullbacks are buy zones. It looks like there could be a pullback. Remember, it's not that it's up here. It's that it's up here, the stochastic momentum. It is up here, and price gives us the failure to break higher, the pullback to support, and a bounce into a lower high. That will give us our continued formation into support, even in these sloppy edges. But this has been running straight up pre-market, and so we expect it to get up into that 22,400 area, and then potentially have some kind of inventory correction and a continued move to the upside as part of the Santa Claus rally. Now, here's the thing. If we cannot get above this value area high, we should rotate all the way back down to value area low. That's 22,259. And then this low zone here, 22,200, right? I suspect there should be a gap fill event that goes from this contract filling in the gap of the last contract, which is NQ1, right? And that number, right, the rollover was yesterday, and that was 22,000. And so, you know, I would not be surprised to see that rollover event fill the gap. It's not uncommon at all. All right, let's look at the YM. So apparently this formation in the YM hasn't been seen since 2018 in terms of consecutive down days. Look at where it's bouncing. Value area low, 43,880. Notice the channel, right? What linearity. That is just insane. So we expect it to try and get to the VWAP at 44,000. What does this normally look like? Well, here's what it looked like when it tried to do it the last time. It bounced, got into old support. It stayed resistance. Now, old support, friends, is not, I mean, structurally, it's not really here until 44,300. However, if we see a pullback here, and that pullback holds 43,800, 900, we're going to have ourselves a little bit of a reflexive burst. Thin volume auction suggests we will get to 44,180, and then we'll see pullbacks as buy zones. Notice we are sitting above our moving averages. Momentum is high, and so we normally have a little wiggle of price that looks like this. So look for that shallow fade. Might be a shallow inventory correction that holds the reversal of trend, and you're in good shape. If, per happenstance, you take a long somewhere at, say, the point of control or yesterday's closing VWAP at 44,000, it's got to hold 43,940, or there's more downside pressure. All right, let's take a look at micro Bitcoin. Right into the target of 110,000. You know, our measured moves showed this number was very likely. We went right into the box. Oh my goodness, that's fantastic. And now take a look. What are we doing? old resistance, breakaway formation, comes back. It fails to hold this level at 106,000. The actual zone that I think they're trying to hold as support is 104,000 in terms of motion. Here we had the rotation of price. Notice trend. We've got ourselves downward motion. So the bounces in this area are going to be selling zones until we do something like this, where we break out, we pull back, and then breach this resistance zone. So here we have the push up into this moving average. It's old resistance, shallow fade, double bottom. That means 104,000 might be the buy, and then the run up again. Of course, you know, I believe this is very long in the tooth, and it most definitely needs to take a breath. But the market does what the market will do. That's the trend line we're watching. The break of this trend line is going to send us down into 104 and 102, potentially all the way back to 96, but that might not happen until after Christmas. Hard to say. All right, let's take a look at oil. Rising off the mark. Should we be in the second contract? Sideways, right? Very messy. Best places to buy, 68.90. Best places to cover the longs would be somewhere around 71 at this juncture, right? It's still very choppy, really bullish, but this could be a little bit of a flag, or we could end up having ourselves, you know, a good old reversal event. Very hard to say, right? That is the zone potentially there that we are breaking down and through. So pullback survive zones, 69.60 was a great area in the pre-market. Now it's moving up into resistance. This is an area where you would cover your longs, look for a topping formation, and then move ahead. Now, why am I saying don't short it up here? Look at where momentum is. It's staying up here, and we haven't even gotten up here yet. So we could see ourselves a really big push into those higher areas. Let's take a look at gold. My suspicion is that gold should get into 26.24. It's very sideways currently. Let me make sure I'm in the right contract. Yeah, this is the area. Value area low. Look at how big the value area is. I mean, it's gigantic, but look at what we've done. It's been a round trip. We started on December the 5th. We peaked up here into our box high range and then collapsed all the way down. And now we're trying to hold this area. It's gotten cheaper, but we could see a flush into these lower areas, particularly where the liquidity lines are sitting. So I'm still looking for 26.23, but the market is trying to hold this ledge. If we take a look at the prior bounce action, what it did was sit here for quite some time, made a higher low. That's what it's doing. It breaks out and then retests the box. See, it breaks out, retests the box, and then moves to the north. That's what we're looking for. In that case, above 26.67 should give us an indication that price action will move. So the first pullback into that very compact area is going to give it. Now, because the FOMC is on the horizon, we know that gold traders are waiting for that. All right, sideways pressure, bottom of the box. This is exactly where we're sitting. Value area high, value area low. We get to the bottom, we bounce. We get to the top, we cover that bounce. Could it be that it breaks away? Yes. Could it be that it fades? Yes. What do we want to do? If you want to chase this long and it breaks out of the 608 zone, you can go long, but your eyeballs are going to have to really be peeled on it, because it could be a failure out of the range and then a collapse back down into the range. It could go either way, folks. The goal is, can I see it begin to top? And that means the candlesticks stop making new highs, they get sideways, and then they begin to break underneath the support edge that they have formed. Okay, that support edge right there for this one, right here for this one. For the hourly, you just look at the congested area and you go, all right, where does that area break? And that's what we'll be looking for. All right, let's take a look below. Support 602.87, the breakout zone 609, and then let's reverse this Fibonacci. 612, with the halfway spot of that being 610. All right, that's what we'll be looking for. Remember today, folks, we have our midday Moneyball report for the Benzinga Pro platform. Same sort of thing going on in the Qs. Gigantic rally up, a little bit of sideways action, but dip buying. 534. My thought would be, we get to the 532. It just tested it in that pre-market action, in the overnight action. It did test it, but not quite. And then it bounced and then recovered, right? Same sort of thing, right? Does it fail to close lower? And then can it break out and hold the region? And that's what we're looking at. The second it gets above the VWAP, where do we see the top edge? 539.70, potentially, no, for heaven's sakes, potentially 540 is the next line in the sand. All right, folks, that's it for me. Remember, nothing Thursday morning, and I don't know about Friday. I have to be on the Benzinga options show, so it could be that I will do something on Friday, and then next week will be very sparse. All right, thanks so much for watching. Please be alert. Watch your size, small size formations. Risk management is job one. All right, take care, everybody. See you soon.